Hello and welcome to tonight's live webinar where we look at ASX investment opportunities in review for the 20th of July. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Investor Signals offers a broking account service which includes our model portfolios on the ASX top 20, top 50 and 100, as well as the US S&P 100. We also have an ASX and US high conviction model. We have a global iShares model portfolio, and we operate an independent portfolio where we can work in partnership with you to execute ideas that we jointly agree on. We can utilize derivatives to enhance portfolio returns, and a popular form there is the covered calls to boost the cash flow from top 20, top 50 shares. So if you'd like to know more about the broking account service, please call me on 1300 614 002. The technology that I'm using tonight is the Investor Signals member area. You can subscribe to it for $1,320, or you can take a free trial by visiting investorsignals.com. On our website you can learn more about our research, which is the subscription to the technology for $1,320, the broking account service and managed fund. Up on screen there is a table of the upcoming calendars, and of note this week is the production numbers. So if we have a look at today, we had S32 production numbers, Sydney Airport sales revenue tomorrow. We've got BHP production, Oz Minerals on Wednesday, Newcrest, which will be interesting, on Thursday, and then of note you got ResMed delivering earnings on Friday. This is last week's US earnings calendar. It was the first week where earnings have kicked off in the US. Of note, JP Morgan delivered a result that was above expectation. So generally the theme from last week was any bank that had exposure to trading revenue did very well with the volatility in the market. Those that are in sort of traditional banking suffered, but the underlying theme across the US banks was that they all increased their provisions for bad loans. Johnson & Johnson delivered in line with expectation. Netflix disappointed slightly, and the stock pulled back initially 10%, recovered a little bit, but still below its highs. This week, tonight, we look at IBM, and I'll update you on the blog tomorrow regarding that. Coca-Cola on Tuesday will be interesting. Snap, from a technology standpoint, maybe Texas Instruments will start to give us a bit of a sense for what sort of advertising spends like, and technology in general. Microsoft is going to be a bellwether of the technology sector. And I think that'll be an important result for the market. Microsoft's rallied hard off the March lows, and we'll need to see those earnings results come through and meet market expectations. Also interesting, Biogen within the sort of biopharmaceutical space in the US market, Nasdaq, which is the Nasdaq exchange, Tesla, so a few results there that'll be interesting, but not really core market shifting results. Thursday you got Dow Inc., AT&T and Intel. Intel will be an interesting one, as will AMD, so two leading chip makers in the US. And Friday we've got American Express, so it'll be interesting to see what type of commentary we see out of American Express regarding loan or credit card arrears and defaults. I'll update you on those US results on the blog as they come through this week. Up on screen there's a graph of the Nasdaq. We continue to watch this closely. We can start to see price action starting to consolidate or exhaust a little bit, sort of where it is at the moment at about 10,500 on the index. Hasn't yet really traded materially below that 10-day average, so we'll continue to watch that, and I'll draw your attention to the break once it happens, and I'll do that via the blog. The snapshot there is our trade table, so if you haven't had a look at this, it's a function in the member area. And this is where we look at second and third derivative indicators to help filter shorter term trading opportunities. So on the long side, so these are all stocks that are under algorithm buy signals, but further filtered to ensure that that they're trading under a positive pivot point and above the moving average. So when we look at that, Ramsey Healthcare, Orica, Brambles and APA stand out. And on the short side, as we go through these names, we still tend to be a bit cautious on the bank. So if I'm scanning through these looking for opportunities on the short side, ANZ stands out, maybe Medibank, NAB, Treasury Wines, they're the kind of ones that, and some of these I've updated on the blog, but we can have a closer look at these as we toggle through the charts this evening. Moving straight into a graph of the XJO, and then we'll get into the stocks to review. I've done a little more technical analysis than I would normally, just as a matter of interest for you. The XJO's undersell conditions, we're expecting resistance to hold at around this 6200 level, but the market's consolidated and moved sideways since really early June, and it's pushing itself into this wedge, so we'll keep an eye as to which way it breaks from that. Just highlight that the stochastic shows the lower high formations there as well, but we'll just it'll be interesting to see as it sort of leads into that triangle there. But our base case is that there are risks building in the US market from a valuation standpoint, and our primary trigger remains the Nasdaq. I'm moving into the top 100 stocks, and I'll toggle through these. We're going to look at all the stocks that are under buy conditions. As we move through the list, it'll get to a point where they switch from buy conditions into sell conditions, which is a reference to whether they're under algorithm buy or algorithm sell. What's a little unique about the algorithm model at the moment is we've got about 70-80% of most indexes that are under sell conditions, so leaving only 20 or 30% of the market under buy conditions. So that's a really low level of buy signals by historical averages. So as the market's rebounded back and we've got a large number of lower high formations, we're seeing a big increase in the sell signal. So I'll just focus on that as that switches out of the buys into the sells as we move through these tonight. TPG, I've been flagging this on the blog at around $8. That's good value. I suggest you just keep an eye on that over the next few days. It looks like it may go down and test that $8 support, so any probe below that might be a good entry opportunity into TPG. Afterpay will remain, it is under buy conditions and it is in the model portfolio, but as far as a short-term trade on the long side, we're just waiting for that to pull back before doing anything there. ResMed, we continue to like this business from a long-term growth standpoint, but it is getting expensive up where it is, at $28 at the moment. We'll have a look at the earnings results when they come through this Friday, and I'll update you via the blog. The last algorithm buy signal there at around $22 provided a good entry opportunity, and the stock sort of, as I mentioned, pushing up towards $28. AusNet Services, so this is one that I'd flagged on the blog. It switched to buy conditions there at around $1.67. Our target's around 180, so we'll see how that opens tomorrow. And this is really just a defensive yield position. The stock's probably got a little bit oversold at 166. Not expecting too much in the way of earnings growth, but just the dividend yield's attractive relative to other areas of the market, which is why on a trading side of it, we're happy to maybe trade out of it around that 180 level. Orica, this is a stock I've been drawing your attention to on the blog. So the buy signal there was around $15.50 to $16. The stock's crossed above the moving average, trading higher. We obviously, with the optimism or the positivity around the mining sector and materials in general, Orica should be a beneficiary of that. The balance sheet's in good shape, so we're looking for that to trade up towards that $18 level before we trade out of that. Northern Star Resources, the gold stocks all consolidated and then had another move higher. We've been buyers of Gold Roads and Newcrest again. In some cases we've traded out of Northern Star today and locked in the profits there. But the gold, as I've been talking about, is well supported by fundamentals, so any consolidation is probably short-lived and gold continues to move higher, especially if we get an environment where US equities pull back. Ansell, we really like the fundamental story, but too expensive for entering new trades up here. It is under algorithm buy conditions. The next time we see it pull back and make a higher low at around $32, I'll draw your attention to that on the blog. Newcrest, as I mentioned, gold moving higher, Newcrest consolidating at the moment, but this is one of the gold plays that you could buy back into it around this $32.50, $33 level. It's likely to break higher from the current consolidation. Sonic Healthcare, terrific business, good long-term earnings growth, but expensive up where it is at the moment. A little bit like Ansell, we'd like to see this roll over, create a higher low, and see another buy signal before we take advantage of new long positions in Sonic Healthcare. Next DC, we're cautious here. I'd highlighted last week that we had a hedge fund or research house that had come out and made some negative comments about Next DC's accounting. Next DC was pretty quick to dismiss those allegations, but we've seen this many times in the market, and more often than not they turn out to be true. So we're a bit cautious on Next DC. We probably won't see any confessions in the upcoming earnings result, but maybe in the December numbers they may start to bring into account some of these questionable bookings of revenue that have been raised. So a little bit cautious there on Next DC until we see more clarity on the outcome there. ASX, terrific business. Trading volume is probably dropping away a little at the moment. The stock's on a very high PE. May just consolidate around this $84 level, but if we do get a softer period in the market and you see it back at around $75, $78, we'd expect to see a buy signal, and that's when you'd want to add that back into your portfolio if you don't already hold it. Saracen Minerals, recent addition to the ASX 100. We like this name. I think value for money, our preferred play at the moment is Newcrest and Gold Road Resources, and Saracen will revisit again if we see a slightly deeper correction there. NIB Holdings, not doing it there in the health insurers. CSL, although I will point out in the US, the health insurers actually had a slightly better earnings result than expected because they're not having the outlays for surgeries at present. So at some point that catches up, but at the moment it's helping short-term cash flows to be boosted in the health insurance. So it might just be something to think about coming into the August earnings results domestically. CSL, still a highlight this as a rare opportunity that you see CSL correct. We're not sure really what impact the COVID period has on the business. Does it retest 250 under weak trading conditions? Well, maybe, but at the moment 275 looks like good support, so just manage your position size if you're adding CSL for the first time to your portfolios. Ramsey Healthcare, we like this. We think the weakness of obviously the impact to elective surgeries with COVID cases rising and shutdowns in Victoria and soon further in New South Wales impacting Ramsey Healthcare business. But let's assume we get through that and into the middle part of next year, business is back to normal. So we'd see this sell-off or this dip in Ramsey as a buying opportunity. Maybe $60 is support, but happy accumulating that on this sell-off. APA Group, back down around sort of 1050 to 1075 is where we see value for APA. It is a good business with 5 to 6% earnings growth, as I've been discussing. Now, iron ores continue to be a highlight of the market. At 106, are we up against resistance? Probably. So it's hard to see these iron ore stocks going too much higher from where they are at the moment. If we go back to Fortescue and just have a look at what the algorithm engine's been saying, switch to buy conditions there at about $8, and the stock continues to make higher highs, although sort of that secondary indicator there's just flagging that we're probably getting pretty close to resistance there at the moment. JB Hi-Fi, not willing to take a look at this until we see a more material correction back down to maybe $35. Alumina, so this is one that we've been on the buy side of, just highlighting on the blog support there around 155, again up at around 180 to $2 maximum. I'd be taking profit on alumina. There's still some question marks as to how the ATO ruling eventually plays out and the final costs that creates for alumina. Dexus, not doing it there at present. QBE avoiding the insurers. Westpac, it's the only bank that's in our model portfolio, and looking at the top 20 index, and I'll just jump in there to highlight this, there's only 4 stocks in the top 20 model at the moment: Brambles, CSL, Newcrest and Westpac. So that, as I mentioned at the beginning of the recording, that's a low number of holdings relative to sort of where those models have been sitting in the past, which is about, normally they would hold somewhere between sort of 60 to 80% of an index would be in the model at any one point in time. But it's just reflective of the amount of stocks that are look like they're sort of at the top of a lower high formation. So Westpac cautious there at the moment. Sydney Airport support maybe at around that 530, 540, but not without its risks. The way to think about Sydney Airports is at the moment it's largely below this moving average. If you start to see sort of the price trading back up, you could be long the stock with a stop loss under that 524. A Flight Centre not doing there at present. Brambles, we like this name. There's a research piece put out today by one of the investment banks that suggested that there are risks to the Brambles earnings picture. We started taking profit on Brambles yesterday and this morning. And in some cases, clients that want to hold the stock, we've sold covered calls over it. We like the Brambles business. We get some comfort from only 6 weeks ago them reaffirming their 5 to 6% earnings growth, but obviously the economic environment has become far more uncertain, and there's maybe some risks as to how that plays through to Brambles earnings. Any sell-off that we do get around this August earnings result we'd see as a buying opportunity. Beach Energy, preference Santos over Beach, but as I've highlighted, we think oil's pretty close to resistance at $40, so you're seeing Santos not do too much on that basis. Now we've switched to stocks that are under sell conditions. I appreciate that not everyone shorts stocks in the market or buys put options, but I just highlight that the next number of stocks that I'm going to go through are all under sell conditions, which is a reference to these algorithm signals up the top. So the primary red box up the top's the buy signal, and the green box is the red box is the sell signal, the green's the buy. What we're looking for is the stocks that are making lower lows and lower highs, and when you see these sell signals on these lower high patterns, they often turn out to be a good indicator. So let's roll through these and just flag, and I'll comment on some of the stocks have better fundamentals than others, but rarely will we buy stocks that are under sell conditions, but sometimes the fundamentals and the value on offer warrant the risk. So BlueScope, so still a bit cautious there on BlueScope, making lower lows, lower highs, and we want to see a bit more clarity around the fundamental story there with demand before we get too aggressive on the long side with BlueScope, but it's not a stock we're shorting. We're not shorting ALS either. Nine Entertainment, not really doing much there. Wise Tech, not one that we're shorting. Evolution Mining, we're certainly not shorting gold at the moment. Goodman Group, so within the property trust, we like this. Maybe it's up against resistance, but don't see downside risks there for Goodman. Zero, again, good technology play, not a stock we'd want to be on the short side of. Altium, a little bit cautious here, and it'll be interesting to take a closer look at the earnings numbers as they come through here. You can see the structure's a little bit different. There is sort of that strong lower low pattern, the lower high. I've flagged their resistance at around $37. Not a stock that we're set on the short side, but keeping an eye on what the fundamentals look like as the August earnings come through. BHP getting back up near resistance at the moment, but again, we're not on the short side of that. Rio, not on the short side of that either, but just flagging up against sort of higher resistance levels there at 105. Cleanaway, we really like the long-term story here. So we're not shorting this stock, but this is one that you want to make sure you keep an eye on. Any sell-off over the back half of this year and a pullback to around 190 would be a great buying opportunity. We think sort of the 2, 3, 5 year outlook for Cleanaway is really attractive as Australia starts to sort of retool its vertically integrated opportunities around sort of that circular economy with recycled materials, and Cleanaway will be a beneficiary of sort of positioning itself within the growth within that market. So we'll continue to revisit Cleanaway. Iluka Resources not doing there at the moment, but again happy to sort of draw your attention to the structure here looks fairly negative to me. You've got a clear lower low, lower high formation there, and maybe resistance there at around that sort of 920 level. There's only a few stocks that we're aggressively short on in the market at the moment. Oz Minerals has had a fabulous run. Copper prices have been strong. Productions continue to expand. You've seen a lot of investment banks upgrade Oz Minerals. The next signal that you'll see in this will be a buy signal, but it's not going to come until such time as we see an actual trough formation, which will be a rollover from where we are at the moment, a pullback maybe back down to 1030, and that'll provide a buying opportunity. But I think Oz Minerals can break out and continue to trade higher over the next 2, 3, 4 years. Cockley, a little cautious there, so not our preference within that sort of healthcare space. Downer EDI preference is CIMIC over Downer, so not doing anything there. Computer share resistance at around $14. Qantas, just if you have a look at sort of the algo model, did a good job of flagging sort of that short signal there at $5, moved lower, but we're not doing anything Qantas at the moment. Boral, we're thinking's up against resistance, as obviously was one of the fundamental themes that we liked as getting exposure to. Early policy response from the Australian government stimulating housing, and you've seen Boral bounce back from oversold levels. Even in the US, housing, new home construction data has been strong in the US as people sort of move out of the city and look to build new homes or buy newly built homes in more areas outside of the city. Sol, Washington Patterson, not doing anything there, not really a stock we cover too closely. AGL, yield support where it is at the moment, so bumping sideways, so we're not really on the short side of that, but if you own it, you could sell covered calls to enhance the income return. Woolworths and Coles we've liked. Woolworths was a stock that we're highlighting around that $34.50. That's now up to $38, $39. We think that's pretty close to full value. So rather than selling the stock, maybe just think about selling covered calls to boost your cash flow. Instead of getting a 3% dividend yield, you're getting up towards 8 to 10% cash flow from the stock. Charter Hall, not doing there at the moment, or in Spark Infrastructure or in Vicinity. Amcor, we like this business up against resistance where it is at the moment. I've highlighted that coming into this 6-month result, we saw the underlying business only growing 1 to 2%. So I think it's possible that the earnings result falls short of where market expectations are, so that'll be a result that we'll look at closely as it comes through. Just jumping back to Amcor, if we do see a correction in Amcor back down to maybe $13, we'd see that as a strong buying opportunity with again like the long-term fundamentals there. Atlas not doing anything. Seek, we're on the short side of this and looking for a correction back down to about $19, and then we'd shift back to a buy signal on that and look to reposition for the long side there on Seek. Link Administration not doing there at the moment. The XJ or the XTO, which is the top 100 index. A2 Milk not doing there at the moment. So just highlight the difference in the structure. Some of these companies you can see here, even though it's under sell signal, it's broken out and creating higher highs, which will mean on the next pullback we'll see it switch to buy conditions. So we're not looking to short the stocks that have really broken out and creating that higher high pattern. We're wanting to find the stocks that have created the lower lows and then the current structure hasn't taken out the prior high. So car sales, we think the earnings growth out of all the technology stocks leaves car sales in a reasonably good position, but it appears that sort of the whole basket, and when I refer to car sales, Zero, Seek, REA, all look a little expensive at the moment. So our view is that if the Nasdaq sort of breaks and closes below that average, some of those local tech stocks maybe could move a little bit lower, at which time we'd look to buy into those into the back half of this year. Macquarie up against resistance possibly at around this 124, but again don't want to be on the short side of that until the US market breaks lower. Medibank Private, putting aside what I mentioned earlier with the US health insurers seeing better retained cash earnings, these companies had fairly weak results coming into this period, so still a bit cautious, and we'll review those closely as the August numbers come through. Excuse me. Cube Holdings, good business up against resistance where it is at $3. Wesfarmers, now sitting on the short side of this, think maybe it's ran a little too hard up against 47.50, and that's really just seeing whether we get that rollover in the US market that we're keeping an eye on at the moment. Magellan Financial not doing there at the moment. Lendlease, the technical structure's negative there. The long-term fundamentals are attractive. You could either just be out of the trade for the moment, waiting for it to shift back to buy conditions, but the long-term fundamentals there for Lendlease are still attractive. CBA up against resistance there at around $72, and happy to be on the short side of CBA until we see more certainty around what these bank provisions look like. GPT, Office Property Trust at the moment, hard to get excited about the recovery opportunity there. Reliance Worldwide not doing there. Challenger not doing there. Star Entertainment, so I've highlighted that Star and Crown are coming into an environment where earnings are going to be questioned again. We've seen Star correct now from sort of 350 down to 260, so in percentage terms it's already sold off a long way, and you're just starting to see Crown correct as well. AMP under sell conditions there at $2, moving lower. Coca-Cola, sell conditions there at around, so again just explaining what I'm referencing. So the signal up the top there, the most current one, is a sell signal at around $9. The stock's traded lower at around $8.50. Owning this stock and selling covered calls at around $8.75 and stripping out the upcoming dividend, I think is a reasonable strategy. I don't think the downside to Coca-Cola is substantial in percentage terms. ANZ, cautious again on the banks. ANZ, I've just flagged resistance there at around that 21, another lower high there at 19. And the relevance of this is if you're on the short side of these and they reverse back up, then you use that as your stop loss to cover your shorts and get back out of them. Coles, terrific run. Now we've been long Coles off this $15 support level, and up here either take profit or sell covered calls. Treasury Wines, the earnings trends are not particularly good in Treasury Wines, in particular in the US. So at the moment I've flagged the resistance there at around that sort of 11.59, and unless the price can sort of trade back above that, we still remain a bit cautious. But there are research houses that are starting to cover Treasury with an upgrade or to an upgrade to a buy recommendation on valuation. So let's just keep that in the back of our mind as we continue to review that chart over the coming weeks. Crown. Further downside here to play out, I think, in Crown, maybe at around $8 it finds buying support. Domino's not doing there. Insurance Australia, again, a little bit cautious, but maybe on a valuation basis you can start to think about that. So NAB, we're on the short side of this. Resistance there at around sort of that $19 level. If it trades back above that, obviously we'll reverse the short positions, but for the moment, CBA and NAB we're on the short side of. REA, we're on the short side of this as well, just fitting with this theme that maybe these technology stocks are a little overdone with where they are at the moment, so we'll continue to revisit that. Aurora disappointed on the earnings. AZJ, good dividend support here, so I don't think the downside's too great. Back at around 425 in a soft market, we'd be a buyer of that. Telstra is running in a resistance around this 355 level. It's under sell conditions. It's now below the moving average. Again, I don't think the downside risks are too great to Telstra. The longer-term fundamental story here still remains the spin-off of Infrastructure Co. So it just becomes how patient you want to be holding Telstra. But the upcoming earnings result probably won't do anything to change the dividend payout ratio of the company. I think Telstra will be doing well to cover their 16 cents of dividends. So on that basis, I'm inclined to think that Telstra really mostly tracks sideways between this sort of 3 and 350, but we'll certainly be taking a closer look at the August earnings result. But Telstra is under sell conditions. Suncorp's under sell conditions. Resistance there at around 1080. We're not putting any new short positions on there with Suncorp. Stockland's moved lower there off that $4 level. I'm not doing anything there, nor in Mirvac. Centre Group under sell conditions, not doing there. Aristocrat, we're on the short side of this, and we'll be keeping a close eye on this upcoming earnings result. Any reversal from where it is and a break back through $27, we'll cover those shorts. Origin, we're not doing anything here. We actually like the Origin business. We like the longer term story here. We like the cash flow support to the 4% dividend yield. The company's paying down debt at a fairly fast clip. LNG prices are extremely soft at the moment and look like they're going to go down and test recent lows. That may see Origin trade back down below 550, and we're happy to be buyers of it down at that level. Tabcorp cautious there, lower high at around that 350, 370. Transurban, our target here was to see if we could pick this up below $13, so we'll just wait and see whether it has that another leg lower and trades around that $12.50 level would be our ideal entry there in Transurban. South32, speculation around whether Fortescue take them over. I haven't gone through the production numbers from today, but obviously initially they were a little bit soft, sold off, but I'll update you on the blog tomorrow as I take a closer look at those production numbers. So the story there with South32 is really, is South32 oversold? There's no immediate clarity on earnings picking up at the moment, so it really is just a value play on a turnaround in some of these commodities that South32 operate in. I'd like to see a bit more momentum before jumping on the long side of South32, so I'll keep you updated on that. James Hardie, resistance up there at around $30, so not doing there. Bank of Queensland, we see regional banks moving lower. This structure looks terrible. So at around $7 there's resistance if you wanted to sort of shuffle a resistance line down even further and say sort of below 630 you're on the short side. If it reverses back up, cover the shorts. Oil search not doing there at the moment. Woodside under sell conditions, so tempting to be on the long side of Woodside because of a valuation basis, but it is under algorithm sell conditions. It is below the moving average, and we'd want to see that sort of start trending back higher before we got on the long side of that Woodside position. Wally's were on the short side of that. Resistance there. And I'll just add another segment line in here. Again, just to say that if we see it reverse and break back up above that, we want to cover those shorts. CIMIC Group today was a negative day. CIMIC reports their earnings on the 30th of this month. We got support there off a low of around $21. A break below that would be negative. This is an example of a stock that's under sell conditions, and the money's been made on the short side clearly. If you were shorting off the back of these signals, you've done very well over the last few years out of CIMIC. From a fundamental standpoint, I like the fact that they're exposed to the increase in infrastructure spending. What we don't know is non-government related contracts. Are we going to see a rise in doubtful payments for CIMIC, and we'll be looking closely at those numbers as they come through on the 30th of this month. But from a valuation standpoint, the stock starts to look attractive down there at around that $20 to $22 range. Ampol, I'd flagged earlier, prior weeks at around $30 was getting into a resistance level based on what was normal valuations over the past number of years. This is a bit of an anomaly with the takeover premium, but we started to see the stock run back into resistance at that $30 level. But I wouldn't expect downside to be too great here, and we'd be buyers of this on a correction back to around that $23, $24 level. Incitec, continue to watch this. We haven't built any positions in Incitec yet, but given that the company was able to raise that capital and shore up the balance sheet, it's worth just keeping a closer eye on IPL. Bendigo, very cautious there on the regionals, and there we are back to Virgin Money and TPG. So thank you for listening in to tonight's recording. Keep an eye on the blog, especially with the US earnings coming up. Make sure you watch the Nasdaq there. Take note if we start to see a series of closes below that recent average. And if you'd like to know more about the technology that I've demonstrated tonight, or you just want to have a chat about the market in general, please don't hesitate to give me a call on the details on screen. Thank you for listening in. I look forward to speaking again next week.